Let's talk about JPMorgan Chase, America's biggest bank and the gold standard of the financial world. This isn't just another bank, it's a financial powerhouse with its hands in everything from your checking account to billion-dollar Wall Street deals. Led by Jamie Dimon, JPMorgan's fortress balance sheet and smart risk management make it a bellwether for the entire economy. When you buy JPM, you're not just buying a bank, you're getting a piece of a financial supermarket, consumer banking, investment banking, and wealth management. Their diversification is the secret sauce. When one division faces headwinds, another picks up the slack, creating stable, reliable earnings. Every earnings season, Wall Street looks to JPM first. Their results set the tone for the entire sector. If JPM beats expectations, the whole group rallies. If they stumble, everyone feels it. This isn't a speculative play, it's a blue-chip stock that's weathered every storm and come out stronger. Jamie Dimon's culture of risk management is legendary, proven in the 2008 crisis and the pandemic. They don't just survive crises, they thrive, often picking up valuable assets on the cheap. Owning JPM is about confidence in a best-in-class operator that protects your capital and grows it over time. Booyah! Let's get to the numbers, because numbers don't lie. JPMorgan's latest earnings blew past Wall Street estimates with massive revenue and net income that left competitors in the dust. The big driver? Net interest income, making more on loans than they pay on deposits thanks to higher interest rates. But it's not just about lending. Investment banking is picking up, and JPM is grabbing its share of the action. Year-over-year growth remains solid, even as the pace of NIE growth slows with the Fed's rate cycle. Their efficiency ratio, costs as a percentage of revenue, is among the best in the business. Prudent risk management shines through. They set aside reserves for bad loans, but actual losses remain low. They're lending to high-quality borrowers, not chasing risky returns. This means earnings are high quality and sustainable. JPM is making money the old-fashioned way by being smart, disciplined, and simply better than the rest. This isn't a fluke, it's a pattern of excellence. That's why Wall Street pays attention. And that's why investors keep coming back. Let's talk dividends, because who doesn't love getting paid to wait? JPMorgan's dividend yield is solid, providing income and a cushion during market volatility. Even better, they've been raising that payout year after year. A sign of confidence in future earnings. The payout ratio is healthy, leaving plenty of room for future increases and reinvestment in growth. On top of dividends, JPMorgan's share buyback program boosts your stake and earnings per share. This 1-2 punch, growing dividends and buybacks, shows a commitment to rewarding shareholders. It's the perfect balance: cash in your pocket today and growth for tomorrow. That's how you build long-term wealth. With JPM, you're not just holding a stock, you're collecting steady, rising income. That's the power of a financial fortress. JPMorgan isn't standing still. Innovation is at the core. They're investing billions in technology, AI, machine learning, and cloud computing to stay ahead of fintech rivals. International expansion is a big focus, especially in Asia and Europe, and they're not afraid to make bold acquisitions, like snapping up First Republic Bank. Leadership is strong, with a deep bench ready for the future, even as Jamie Dimon's eventual succession looms. New products keep rolling out: enhanced mobile banking, expanded payments, and a growing lineup of investment products. This relentless drive keeps JPM relevant and growing. They're not just a bank, they're building the financial platform of the future. Strategic moves, tech investments, and a culture of excellence set them apart. JPMorgan is always looking for the next edge. That's how you stay on top, and that's why they lead the pack. No investment is risk-free, not even JPMorgan. The biggest challenge? Interest rates. If the Fed cuts, net interest margins could shrink. But JPM's diversified business can offset that with growth in investment banking and loan volumes. Regulation is a constant headwind, with higher capital requirements always looming. Still, JPM's scale and discipline give it a huge competitive edge. The American economy remains resilient, and as it grows, so does demand for banking services. A rebound in capital markets could be a major tailwind, boosting JPM's investment banking profits. Ultimately, being the best-run bank in the world is JPM's greatest asset. Their technology, leadership, and diversified model provide stability and opportunity. In uncertain times, quality matters, and investors flock to the best. The challenges are real, but the strengths are greater. This is a stock to own for the long haul. Don't overthink it.